Hello there. Some people are trying to tie the increase in rail fares due in January 2018 to the UK's decision to leave the European Union. The headline in The Independent caught my eye. UK rail fares to soar due to Brexit inflation spike. So I thought I'd take a look. As the article explains, many train operators are allowed to increase their regulated rail fares by a measure of inflation called the Retail Prices Index, or RPI, as calculated by the Office for National Statistics for the month of July. This then takes effect at the start of the following year. Now, the RPI is an old, outdated and unofficial measure of inflation. It has long been replaced by the Consumer Prices Index, or CPI. But with the way they are calculated, RPI comes out larger than CPI. For example, the Office for National Statistics issued inflation figures for July 2017 today. CPI is 2.6% and RPI is 3.6%. So why are regulated train fares still allowed to rise by the old, larger RPI measure? Is it the fault of Brexit that regulated rail fares are allowed to go up by RPI and therefore higher than official inflation? Or is it the fault of the way that successive governments have put the rail operators' franchises together? Next, the government actually has a target for inflation, a positive target. That target is 2% as measured by CPI. So if the government was on target, RPI would be about 3% anyway. So how can 3.6% be described as soaring? Now we'll put this in an historical context. The year before we joined the common market, the average retail prices index inflation for 1972 was 7.7%. It had been in single digits since at least 1960. When the UK joined the EU in the following year in 1973, the average retail prices index inflation went up to 10.6%. The year after that, it rocketed to 19.1%, and the average for the year of the first in-out referendum in 1975 was an eye-watering 24.9%, and it actually hit a high of 26.9% in 1 month. It then stayed mostly in double digits until about 1982. Was the common market blamed directly for that? And, if so, why weren't ministers pulling us out? More recently, in 2008 and 2011, the July measure of RPI was 5%, and in 2010 it was 4.8%. Were we blaming the EU directly for that? In fact, as far as I can see, average annual inflation, according to RPI, has been in the order of 5.5% since 1960. So this blip, which the Remainers are clinging on to, is well below the historical average. In reality, the only reason this RPI figure of 3.6% stands out today is because of the recent low inflation caused by the credit crunch and Great Recession. So, in summary, RPI inflation on voting to stay in the common market was 24.9% for the year, and on voting to leave the EU, it was just 2.5%. Don't you think that puts the so-called Brexit inflation spike in context? Please leave a comment below. Thank you. Please do like and share this video, and also subscribe to my channel. And when subscribing, please do remember to press on the little bell next to the subscribe button. That way you'll get an alert every single time I put up a new video. Thank you very much for watching.